I would like to welcome to the first Bauhaus event of this year. It's a great pleasure to have you with us this afternoon. We have a fantastic agenda lined up for this afternoon where we really have crucial topics that will be tackled and really fantastic speakers to guide us towards this journey towards 2022 and see what we can do. What we can do to support the green agenda of the European Commission, the European institution, but also to deploy a global network to change the mentality of the green market. I'm pretty sure that some of you is quite skeptical that it's impossible to change the mentality of so many stakeholders at the same time and also influence the life of millions of citizens in one go. Well, if some of you is skeptical, I decided to have this meeting today, the 7th of February, for a very specific reasons. First of all, to congratulate with the Queen for the 70th anniversary since she took the throne. But more importantly, apart from the joke, to celebrate together the 30th anniversary of the Treaty of Maastricht. And I would like to invite all of you, and I would like to ask Richard to help me to make a little game. Think where you were on the 7th of February, 92, and how your life has changed in only a few decades. Only because of a treaty, only because a strong agreement of 27, 28 countries that have decided to change and to work together for a common goal. So what I would like to demonstrate today is that we should not underestimate the power that international cooperation can have in changing micro and macro incentive in getting together, in improving the world. Well, I can tell you where I was on the 7th of February, 92. I was in the gymnasium, in school, in the outskirts of Rome. Actually, the school was quite central. And I had no idea of what was about to happen in Maastricht. I had no clue what was Maastricht and where was Maastricht. Well, that little city changed my life radically. Actually, we have been educated as a generation to the international cooperation, to work together to a new set of value. With that treaty, the European Parliament took the power of guiding us. We had the idea of a common currency, a common single market, and all our generation, because I know all of you, has massively benefit from that agreement. It was the land of opportunity for our generation. It changed our life. Some of us have left their home country. We forgot where is our home, and now also the office, just to take but our life is changing, and we can do a lot of good things together, working together and changing the life of millions of citizens by implementing common standards, common best practices. And this is the spirit of the Energy Efficiency Mortgage Initiative. We are called to a massive challenge that we have to take action all together in a very narrow time frame. We have only 10 years to take action and to make the difference. And for do this, we need a lot of instruments. And they are not yet completely available. Banks, if they want to be involved, if they want to participate to this fantastic adventure, they need data. They need data, and then they need the capacity to collect data as much as possible in an harmonized way, and then channel them to the green investors that are knocking at our doors asking for green papers. In this, there is also the fantastic story of the green mortgages, where we should incentivize citizens, families, to renovate and retrofit their houses for their own benefit, for their own micro interest. By retrofitting their house, they can save 70% of the energy bill. They can improve the value of their house. And it's our responsibility all together to build together a systemic approach, a win-win process for consumer, issuers, and investors. And the pillar of this is data. And the leitmotif of today, and I'm very glad to have such a high-level speaker with us, is to discover how our regulatory environment is changing. And I would like to thank Thibault, representing the European Commission, to be with us today and to giving an overview of what are the opportunities of the new energy performance building directive. We will analyze what are the implications of the monetary policy. I think there is a big news since last week when the new rate of inflation has been announced. Now energy efficiency is a core issue in terms of financial stability. So the mission, we all know that only the Bank of England has a clear mission on climate change. But now I think that the landscape is changing and energy efficiency is a question of price stability. Then who will make the difference in this story? Consumers. Understanding where is the appetite of the consumer is fundamental. It's fundamental, and we are very glad that E.ON is supporting us. Since years, E.ON is supporting this initiative and is giving us this consumer touch, this consumer overview that is extremely important. And we have new markets, we are analyzing a new market and trying to understand better how to position ourselves. Last but not least, the most important topic of the day, which is how we can manage data. If we don't manage the data properly, we are creating the biggest scandal of centuries. We need to avoid greenwashing. This is what the European institutions are asking us, and we fully support, we fully buy this argument, but we need to have access to data. With this, I would like to conclude my very short introduction, and I would like to ask Richard, where you were on the 7th of February, 92.
I remember it clearly, Luca, thank you. I was on the trading floor, the FX trading floor at Citibank in London, with a whole bank of people trading Dutch guilder to Finnish marker to francs to Deutschmarks, all realizing that was going to fundamentally change, and very much for the better with the introduction of liquidity, and it, yeah, very rapidly changed the face of that trading floor. Thank you for that introduction, an inspiring introduction as ever. As Luca says, ladies and gentlemen, this is the 10th, I can't believe it's the 10th, but apparently it is the 10th edition of our Bauhaus. We have the ECB, we have GDPR, we have consumer opinions, and we have the European Commission, all coming up in the next couple of hours. As ever, though, this isn't supposed to be speeches. We want this to be as interactive as possible. Everybody here, I'm sure, has opinions, I'm sure has questions. Let's hope nobody here is going to be shy about them. Please feel free to ask questions as we go. Send me a message if you'd like to be anonymous, if your question is controversial. Please join in. And the other thing I'd say is, after this is over, please come back with any feedback, any sessions that you would like to see, any topics that you would like us to cover in future events, future versions of this event. So, yeah, so the running order for today. In about an hour and a half, we're going to be dealing with GDPR and the practicalities of that for data gathering and possible solutions to the problems there. Just before that, Ligia Bogdan, old friend of this event, who's going to be coming back to update us on the work that she's doing with E.ON on consumer attitudes towards green mortgages. Before that, Uuriintuya Batsaikhan is from Positive Money Europe, which is a great name, I have to say, is going to be talking about the ECB and how this could potentially be a force for good in what we're trying to do. But it's a great pleasure to be able to start with, well, to start at the top, frankly, to start with the European Commission and Thibault. Now, if you've been paying attention, you'll have seen in was it October 2020, this publication of the Renovation Wave strategy, the big picture dream of the green agenda. And just before Christmas, annoyingly close to Christmas, so maybe lots of people will have missed it, we saw the revision, or the proposal for the revision of the energy building directive, addressing lots of the practical and political aspects of that. So, Thibault, can I ask you to step through that? But before, let's ask you Luca's question. Where were you 30 years ago today? And you're on mute.
Yes, thanks a lot for your introduction. Very clear, inspiring. Well, it's a very good question. I have to be honest. So in 1992, there's maybe 50% of chances that I was in my cradle, actually. moving around with my parents. But I do remember, because my parents told me about that recently, that they had just moved in a very brand new flat, also thanks to support from the French state at the time. So it was a tiny flat, but already there were some efforts to make it comfortable and up to the energy performance standards. So, I mean, we still have a long way to cover, but still already in 1992, there was already, let's say, the seed that had been planted maybe for energy efficient homes. And so I'm happy to start with the presentation of the Energy Performance of Buildings Directive proposal, so the EPBD. Just to really a few words to say that, well, the Energy Efficient Mortgages Initiative is a very good example of an initiative aiming to deliver on sustainability in its three dimensions, meaning economic, social, and environmental. And we absolutely need those initiatives to meet our 2030 and 2050 objectives. A few words about myself also. I'm a policy officer in the European Commission, Director General for Energy. And so in this context, I work for the unit dealing with energy efficiency for buildings and for products. Meaning that obviously for buildings, the core of what we do is, working on the implementation of proposals to update the energy performance of building directive. And on products, we also deal with the so-called Eco-Design Directive. And there is also there an ongoing initiative to update the current framework, which for the moment concerns energy-related products, which may also be widened to other kinds of products. I'll now upload my presentation and let me know if it doesn't show on the screen.
Yep, we can see it. Thank you.
Perfect. And I will move straight to the outline of the presentation. I will start with a few words on the background to the initiative for the revision of the EPBD, the two objectives of the revision to 2030-2050, also then focusing on some key provisions of the proposal, which include, as you mentioned, the essential elements of data and financing, and I will leave some time also at the end for questions. And to start with the background, well, you all know that we have this target to meet by 2030 minus 55% emissions, so meaning in less than 10 years, as you rightly pointed out, Luca. And this is all the more relevant, again, as you mentioned already, in this context of very high energy prices. So to do that, we have this energy efficiency first principle that we try to implement in all our Commission policies, which is that energy efficiency shall have the priority in what we do. Now, to meet our targets, buildings account for 40% of the energy consumed in the EU, and around 1/3 of energy-related greenhouse gas emissions. So it's absolutely essential to reduce their impact. And for this reason, as Richard mentioned, in October of 2020, we adopted the Renovation Wave strategy, which aims at doubling the rate of renovation of buildings, but also lead to deeper renovations, so not only shallow ones. It includes an action plan with some financing and regulatory measures, one of the key ones being the revision of the EPBD, and the goal is to lead to 35 million building units being renovated by 2030. Now, to quickly sketch out the ecosystem in which the proposal is grounded, you all know that in summer of last year, we published the first leg, let's say, of the Fit for 55 package. which includes the proposal for the revision of the Energy Efficiency Directive, the EED, but also the revision of the emission trading scheme to include carbon pricing of buildings and transports, but also the revision of the Renewable Energy Directive, again, to lead to this target of having 40% of energy coming from renewable sources. And there are lots of links between the EPBD and those other initiatives, which we can maybe touch upon later or during the questions. Now, on the EPBD itself, indeed, we adopted the proposal just before Christmas to deliver on the Renovation Wave goal to have it adopted in 2021. And now it has reached the desk of the Council, the Council of the EU, and of the European Parliament, where the rapporteur for the file has been appointed also recently. Now, with those two institutions having to, analyze the file and make their proposal for updates, reach an agreement, adopt the directive, and then with the time which is needed for transposition, this won't be at least 2-3 years before the revised EPBD really enters into force and has to be complied with. But already what I can say is that the objectives of the revision are twofold. The first is towards 2030, really contributing to the minus 55% GHG emission target. And for that, as referenced in the climate target plan, the GHG emissions linked to buildings should be reduced by 60% and buildings' energy consumption by 14%. And you can see on the graph, if you look at the green dotted line, that while the curve of emission reductions will have to be steeper than what it is currently now, if you look at the blue line between 2015 and 2020. The second objective towards 2050 is really to contribute already to the climate neutrality goal, to make the EU the first climate neutral continent. And we all know that buildings are there to stand for at least 20, 30, 40 years. So we have to do it already now. Now, on the outline of the key provisions, I will start with existing buildings, then I'll move to new buildings, and I will finish by focusing on information provision and financing provisions. And starting with existing buildings, maybe the key proposal in what we put forward is the minimum energy performance standards, the MEPS. Why we have those MEPS? It's because we believe we absolutely need them to really lift the worst performing buildings towards more energy efficient conditions quickly, so by 2030 and beyond there. And also because we need really to address energy poverty, and we know that most people, most energy vulnerable citizens do live in energy poor buildings. So for this reason, we have this provision in Article 9 on MEPS. They will start already in 2027 for public buildings and non-residential buildings, so meaning essentially offices, but also factories, which will have to meet an EPC, an Energy Performance Class F by 2027 and E by 2030. And then the same requirements will apply for residential buildings, EPC F in 2030 and EPC E in 2033. On top of that, we ask member states to roll out national minimum energy performance standards, and they will also have to be included in the building renovation plans, the national building renovation plans, with an objective to reach the 2030, 40, and 50 targets that they will set for themselves. On top of the MEPS, we also propose a definition of what a deep renovation is. And that will be a renovation which leads to a zero emission building. And I will come to what a zero emission building is. That will be from 2030, and up to 2030, the definition is about buildings meeting the zero energy, nearly zero energy buildings target. We also include a definition of what a staged deep renovation is, because we know that most people are not able to reach EPC B or C or possibly even A in one go because of financing or regulatory or administrative reasons. And so, well, stage deep renovation will also be incentivized. And we also, for this reason, have updated the state aid rules so that it's also reflected there, and stage deep renovation can also benefit from higher financial support. Now, moving on to new buildings, we are moving from nearly zero energy buildings to zero emission buildings. And the definition of ZEBs is a building which has a very high energy performance as determined with the annex that we put forward, and where the low amount or very low amount of energy which is still required by the building has to be fully covered by renewable energy or energy coming from a sustainable district heating. On this very low amount of energy which still is necessary, we also propose some maximum ceilings, and those ceilings depend on the climatic zone in which the building is located. We have four climatic zones, and these are the Mediterranean, continental, Nordic, and oceanic. On top of the operational direct emissions, we include a requirement on providing information on the life cycle CO2 equivalent emissions of the building, and this is called the global warming potential. This global warming potential will have to be referenced in the energy performance class in the EPC. Now, moving on to information provisions, by 2025, we provide an obligation for member states to rescale their energy performance class, their EPC. And the rescale is based on the following: that to be labeled EPC A, a building will have to meet the zero emission building definition. And EPC class G will be for the 15 worst performing buildings. We also have in the proposal a specific annex, a template on what an EPC should include, with some mandatory indicators, but also optional ones from which member states can select those that they think are relevant for their national situation. The validity of the EPC will be of only 5 years for the worst performing buildings and 10 years for other buildings. And what's also important is that building units or buildings which are offered for sale or for rent will have to, an EPC will have to be published and already in the advertisement. So really at the very first stage of the sale process, not at the end when already someone has been picked up to buy the building. A second important provision on information is about databases, because as you mentioned, we know that to deliver on the full potential of EPCs, but also information coming from the building renovation passports, data should be centralized and it should be accessible. I see also a few questions, and I will take them at the end. And for this reason, we include some provisions on databases. Essentially, the full digital EPC will have to be uploaded to a national database, and the Commission will have by mid-2024 adopt an implementing act with a view to transferring the data from the national databases to the EU1, the so-called Building Stock Observatory, so the single European repository. On access to data, because it should be centralized, but it should also be accessible to the widest possible audience. It's a very sensitive topic. I mean, we cannot give access to the full data to anyone interested, obviously for data protection reasons. And so as a disclaimer, the new rules on data interoperability and access to data are to be laid down by the Commission by means of an implementing act. But what I can already say is that we have introduced a few key principles in the proposal. The first is that the database should be publicly available based on anonymized data, obviously, but also that for buildings which are offered for rent or for sale, member states shall ensure access to the full EPC for prospective tenants and buyers. And regarding financial institutions, they will also have full access to the EPC data as regards the data in their investment portfolio. Another key principle is that owners, tenants, and managers of buildings will have direct access to their data, but also that at their request, the access to the data shall be made available to a third party. Final provision on access to data is about the costs, and we also make clear that no additional costs shall be charged to the owner, to the tenant, to the manager, but also to third-party access if asked for by the owner, tenant, or manager. Now I move on to the last part of my presentation, which is about financing. We have some specific provisions starting first things first with Article 3 on the national building renovation plans, which makes clear that when member states send their draft plan to the Commission, so they have an overview of the building stock, they have their objectives for 2030, 2040, 2050, but they also have a specific section on the financing particular needs to meet those objectives. And if the Commission, based on the draft plans, believes that there is a mismatch between the targets and the capacities which are planned, the Commission is entitled to ask the member states to update the plan so that, well, all those elements of building stock, targets, and needs are aligned. In the article on the minimum energy performance standards, so on the MEPS, we also make clear that funding should, as a priority, target energy poor customers and those in particular living in social housing. And finally, on those specific provisions, we also include wording on the renovation passports, which when it's delivered to prospective owners or tenants wishing to make works to their buildings, that it shall contain information on how the financing could be accessed and all the financing programs that are out there to benefit from. We also have a specific article, Article 15, which is really building on the current financing article, Article 10 of the current EPBD. And it really starts by making clear that the goal is to provide sufficient financing capacities to reach our climate neutrality by 2050 objective. And obviously no one should shy away from this massive financial efforts. And that's also for the Commission, so which is planning to make available around 150 billion euros between 2025 and 2030 through the Recovery and Resilience Facility. We have a so-called Renovate flagship as part of the RRF, but also the national member states, and also to incentivize member states to provide more public funding. we have worked on updating the state aid guidelines. That includes the guidelines on climate, energy, and the environment, which have been adopted very recently, but also the upcoming revision of the General Block Exemption Regulation, so the GBER. But we also need to bring in the private firepower, and for this objective, member states are, as we word it in the proposal, asked to really promote the rollout of enabling funds, which includes energy efficiency loans, but also mortgages for energy for building renovation. And then we have also a list of other mechanisms that they can promote and should promote. As public money is scarce, also the priority should be on incentivizing deep renovations and renovations that lead overall to above 30% of energy savings. That also to be in line with the EU taxonomy. Which brings me to the link between the EPBD and taxonomy. Well, to be classified, as you know, as sustainable, an investment should fulfill the screening criteria that are provided in the taxonomy regulation and in the delegated act, which was adopted last summer. And so for building specifically, those main conditions are first, or either that the renovation should lead to at least 30% of energy savings, but it can also be that to be considered sustainable, a renovation should be about replacing some specific elements of the building, like the windows or the boiler, but that should be done in accordance with the what we call the cost optimal energy performance requirements. And in certain specific situations, when there is an act which has been adopted pursuant to the Eco-Design Directive, that this incentive should be targeting the significant best two energy classes, which are laid down in the Delegated Act. I stop here for the presentation. Thank you for listening, and don't hesitate if you have questions. And I see actually a few questions, but
we certainly do have questions. I think, well, I had a few questions, but I think I probably ought to give precedence to the audience ones. So two questions I think we can probably group together. One is about ZEB and NZEB. So I think the taxonomy definition of NZEB minus 10% and how that compares to ZEB, if I can say that. And with this top 15%, you was also asking us whether we're going to have an official publication every year for each country or region or whatever of where the cutoff of the top 15% is. Is that something you're able to comment on now?
Sorry, I will fully. I cannot open fully the. Okay, I cannot see the questions for the moment.
So question one was, how does NZEB compare to the taxonomy definition of NZEB minus 10%? And related question, will there be an official publication of the top 15% by region or by country?
Sorry, I didn't really get the first question on the minus 10%.
It was about the relationship between NZEB minus 10%, which I think is referred to in the taxonomy, and you refer to zero emissions buildings definition.
Well, to be honest, it may be that I haven't fully grasped the question on the minus 10%, or that I haven't seen the specific provision in the taxonomy. What I can say is that so for the ZEB, so the NZEBs will still be applicable until 2030, essentially, and from 2030 the ZEBs will kick in. And so to be labeled as ZEB, a building will have to have an energy consumption which is below a certain ceiling, which we have laid down in the proposal. And that depends, of course, on the on the climatic zone. So if you're from a Nordic, I mean, if a building is located in a Nordic country, this may be slightly higher. So I think it's around maybe 70 kilowatt hour per square meter per year of energy consumption, compared to a slightly lower one for a building located in an oceanic or Mediterranean country. Now, so, and your second question was about these 15%, right?
Yes,
Worst performing buildings.
Is that published on a by region or by country basis?
Yes, so it will be for member states so by the end of 2024, I think, to really based on a sample of buildings that they have, because it's impossible for them obviously to cover the whole national building stock, to reach, I mean, to arrive to what the worst 15% is. So this will be above a certain energy consumption, so kilowatt hour per square meter per year. And so this will be fixed. Let's say that they do it in 2024. They know that in Sweden, to fall under EPCG, the building will use more than 250 kilowatt hour of energy per square meter per year. And so this will stay, I mean, let's say this ceiling of 250 will remain as long as the Commission doesn't rescale the EPCs. So it's not like there is a rolling yearly basis that every year the member state has to have some sort of estimate of this 15%, because obviously this will change year after year, meaning that buildings will start using less energy, obviously. So most buildings will actually fall under the 250. But this will just mean that out of the 15% that were estimated in 2024, in 2029, for example, you will only have 5% of the building stock, which is still above this 250. So it doesn't mean, obviously, that on a yearly basis, you would still have to estimate the 15% worst performing, because that would prevent the member states de facto from reaching the MEPs. If you always have 15% of the buildings which are EPCG, then you cannot lift this 15% out of the. So that's the goal. But obviously, I mean, if we see that this goes very fast and most buildings are out of this EPCG class in the national member states in only 2-3 years' time, it may be that there's a decision to rescale it, but we are not. We are clearly not there yet.
We've got loads of questions and not much time, so I'm just going to pick one question because it's basically the same question I would like to have asked, which is how to take into account that not all houses have to have an EPC. It's only those that are sold or built or rented that have to have them, with this grand ambition of a database. Most houses don't have one of these.
Yeah. So maybe the related question is, if not all buildings have an EPC, how do you ensure that all buildings are lifted out of EPC G or EPC F, right? I mean, that is it or is the question?
Well, we simply don't know. I guess most buildings, I'm guessing, don't actually have an EPC.
No, it's true. I mean, there's only one member state, I think it's the Netherlands, where I think 100% or almost 100% of the building stock has an EPC, because there was a very ambitious national provision recently. But indeed, that's an issue that it's impossible to ask member states to have a full coverage of all the buildings, to have an EPC for all buildings. And that's why we link it, let's say, to the sale or to renting the building, because we think it's the most efficient way to progressively cover all the buildings. But indeed, I mean, there are very different starting points depending on the member states. So we cannot ask member states to cover the full amount of the buildings. Now, that will also be, I mean, that's why it's a directive proposal. It's already a directive. It's a directive update proposal that will be for member states to see how they can cover as many buildings as possible and also covering the full range. So not only new buildings, not only the best performing buildings, but the full range of buildings, and to have as clear estimate as possible of which are the buildings which are probably EPC-G or EPC-F or EPC-E, so that really they focus on those buildings.
Richard and Thibault, allow me to make a proposal in the sense that I see a lot of interest on this topic. I mean, today we will never succeed on completing this debate. I also see that there is a real sincere interest. I mean, I see the question on mortgage portfolio standards, those kind of things. Can I propose, I mean, Thibault, can we try to have you also in our second Bauhaus this year in mid-March? I mean, maybe we can try to have some, to have a bit more focus on maybe on specific areas. Together with Richard, we can try to have a little debate of 30 minutes, maybe in the next round, because I still see a question coming. I think that we will not be able to reply to all of them. I think the view of the Commission will be really helpful for market stakeholders. We are building, Thibault, an ecosystem where we hope that banks can actually extrapolate data from the small and medium enterprises working in the retrofitting or local authorities. So we try to propose solution as an energy efficiency mortgage initiative, but allow me to maybe try to trap you for another half an hour of discussion for March. Like this, we can maybe, Richard, unfortunately, we have also other topics that have to be covered. And I think this is a very fundamental question. And I see a lot of attention from the stakeholders of these topics.
Yeah, it makes sense. And indeed, I see the written questions now. I mean, I see quite a few indeed, which are all very relevant. So we can discuss that indeed. And I will leave the floor to other speakers as well now. Yes.
Thibault, thank you so much for making such a clear explanation of, can I say, a very ambitious plan. And we like ambitious here, that's good. But yes, you touched on so many topics that are practical, that are legal, that are financial, that so much of the other Bauhaus events tap onto, that I think we absolutely need to give us more time to go through those. So yeah, if you can join us in the next event, that would be incredidly helpful.
Thank you, Richard, and thank you, Luca, and I will stay also in the presentation to attend. Thank you.
Thanks, Thibault. I'd like that to move on to, as I said, the wonderfully named Positive Money Europe, and Uuriintuya Batsaikhan, who is from that organisation, who is looking at the enormity of the ECB's intervention in the markets and how perhaps we can take this elephant in the room and see if we can use it to try to facilitate what we're trying to do here. And Uri, sorry, I'm going to have to ask with Luca's initial question, but I'm going to guess that we're going to, well, I've already had Thibault say he was in the cradle 30 years ago. So I'm going to ask you, but I suspect the answer is you probably weren't born then. But Uri, please, the floor is yours.
Thank you, Richard, and thank you, Luca, for the interesting question. In 1992 February, I was a toddler. I was born. I was just born in the kind of post-communist transition in Mongolia, and I think the Maastricht Treaty, and also coinciding with the just after fall of the Berlin Wall and unification, I think it was a very positive time, and not only kind of facilitated a lot of opportunities for young people, not only in Europe but also reverberated across the whole world. So the kind of the challenges that we need to tackle needs unification and cooperation, and building is exactly the field where a lot of cooperation is needed very much across countries, disciplines, and organizations. So with that, I would start my presentation. Okay, can you see my presentation?
Yes, we can, yep.
Great, thank you. And thanks for the nice compliment on our name. Exactly, Positive Money Europe. We're a research, campaigning, and advocacy organization that wants to make Eurozone and the ECB more policies more sustainable, democratic, and transparent. And you might be wondering how come an ECB watchdog is involved in any kind of discussion about buildings. This goes to very much in kind of sustainable monetary policy domain, and given the scale of kind of monetary policy operations, and considering the fact that 60% of the greenhouse gas emissions comes from buildings, this is really the topic that is very much urgent and needs to be tackled. And at the same time, there is the financial firepower needed to scale up the challenge only if we are bold and courageous and energetic enough to do this. And I hope we are. So in around a year ago, we published this report, Money Looking for a Home, how to make the ECB negative rates pay for building renovations. And we consulted with a lot of building stakeholders, including Luca, who gave us a very valuable opinion, as we came from very much a monetary policy field, and I'm an economist and had to say that I didn't have much background in buildings. But then afterwards, so, I mean, we discover almost every day how gargantuan task it is and how urgent it is. So the task at hand is, of course, renovation of, I don't have to repeat the enormity of the scale of 150,000 buildings a week. The financing gap that is needed diverges here and there, but it's around 150 to 275 billion per year to achieve 55 reduction and net zero by 2050. And public financing cannot do it alone. I think that's a message that needs to be put out there. And in fact, public financing, as Thibault mentioned earlier, should target those who are most in need and living in the worst performing buildings. But how about the rest of us? ECB itself did a study in the ECB macroprudential bulletin that there is a big investment gap for greening the building sector, and that needs to be filled exclusively by bank loans. And this is 240 billion euros per year. So this it's enormous challenge. So how to fill this gap, or at least how to make steps in order to fill this gap, is we try to first of all understand why is the private financing so slow? Why can't it step up? I think this is it boils down to cost and complexity, both on the banking side and on the customer and the client side. I think the graph on the right-hand side is very telling. If you see that most of the renovations are being funded by own capital, people fund their renovations themselves. And what it says is not only that people wait until they have sufficient money to invest in their buildings, but also when they do, it could be one of the reasons why they go for lighter renovations and not be able to put down a big amount of money to go for deeper renovations. So how do we incentivize the customers? But how do we also make banks available and incentivizing the customers to extend cheaper loans to, yeah?
Yuri, sorry, can I just, a couple of people have asked, is it possible to make this larger? Can we go full screen or
Oh,
something?
you can
I think it's quite small to read. I should say that all of these presentations will be available on the website later, but it's just if there's an easy way to make it larger, that would be really helpful.
Oh, okay.
Sorry to interrupt.
Yeah, sorry. I'm trying to.
If you click on swap displays, then you will show you're showing the presenter's view now.
Oh,
if you
I see.
click on swap displays, that's it.
Thank you.
Perfect. Thank you. Awesome. Thank you very much. Yeah, no, it's okay. I didn't know that it was being shown. So from the banking sector, what we understand is that renovation loans are loans of small amount compared to mortgage loans, and they're expensive to administer. And also, when we just kind of anecdotally take some banks and look at the availability of energy efficient renovation loans, they're classified in the consumer loan portfolio, and therefore, because they're not securitized, so unlike a mortgage, there's a house behind it, they have very high interest rates, 5 to 6%. So of course, there's a huge barrier because energy, well, you do the renovation, and if the energy costs are still high, it's not paid off during the time of the loan, and it's expensive, and perhaps energy efficient renovations are not really on the list of priorities when it comes to spending of a household, for example, and also that banking loan officers perhaps don't necessarily understand the whole complexity about energy efficiency. I mean, you touched upon the EPCs that seem to be the problem also. On the client side, it's of course the lack of availability of savings, lack of disposable income, and given that there is a health crisis still ongoing, it probably the priority of loans also went down the list, but we don't have the research for that. They probably put off that investment. Lack of collateral to take out the renovation loan, the cost of any credit, and the cost of initial energy assessment, which is non-negligible. And when they discover how much money there is needed, probably they're also put off or delay the investment into energy efficiency. And of course, things that go beyond cost, which is complexity, lack of expertise, incentives, low priority, and these kind of things which cannot be kind of directed with funding all on itself, but the funding can be a lever so that the complexity goes down. So what we propose is to give a bit of an idea of how the ECB gives out loans to banks through called refinancing operations. And the biggest kind of refinancing operations at the moment, it's called the targeted longer term refinancing operations, or the TLTROs. I'm not sure the background of the people here, but I would just repeat kind of the basic features of the TLTROs. So what ECB does is gives out loans the banks ask for loans from the ECB. And at the moment, the kind of default is negative 0.5%. So it's a negative rate loan. And then if banks meet a certain lending threshold, which is 0, which means if they keep their lending stable over a certain period of time, then they can tap into they can borrow below minus 0.5 to even minus 1%. So what it is a subsidy basically to banks to borrow, to stimulate the economy, and to borrow from the ECB at very, very attractive rates. The problem with the TLTROs, and just to give you the idea of the scale, is ECB allocated around 2 trillion euros since the start of the pandemic, since March 2020. The negative thing about this is that not only do we don't have access to TLTROs, but also there is no environmental or climate criteria attached to this loan. So we don't know it might be going to polluting sectors, perhaps as much as energy efficiency sectors. So what is needed is that directing this huge amount of loans, this tap into a sector where where 200 billion euro funding is needed annually, and scale up from that moment. So at the moment, the loans are for 4 years, up to 50% of their loan volume. What we propose is a longer duration loan, so more than 4 years, to meet the kind of where when you invest in a house and then you're able to save from the energy cost, and you pay back as your loan, so to meet the duration of the loan. The green discount rate, as we call this presentation, the negative rate, it can go below -1% or even at -1%. So that this attractive rate, of course, is passed down to the consumer. It doesn't really makes much sense. It would be just subsidy for banks if the current interest rates remained. And additional discounts if banks meet the lending thresholds of Renovation Wave country targets. And this makes the ECB and the European Commission closer to the Paris alignment. And as you know, I think Luca also touched before, central banks in Europe and also around the world are moving in the direction of taking into account that climate change has great impacts on their policy, on their monetary policy, and monetary policy has great impact on climate change and the economy and climate. So what are the key benefits of our proposal? What we're basically proposing is that banks tap into this loan to lower their transaction costs, because if we think about as a final interest rate as a cost to the bank, the risk of the client. The risk of the client will differ among different people. My risk category would be very different from somebody else, from Richard's, for example. So with the kind of this negative rate, they would be able to cover the transaction costs of administering small amounts of loans, and also invest in the knowledge of their personnel and why banks. And also, they would incentivize their customers to deploy to use the energy renovation loans. As we understand, banks really sit at the very much at the intersection of different clients, and they could, in fact, kind of plant the idea to carry out energy efficient renovation loans, because without incentivizing customers, you cannot force them to take out expensive renovation loans. So, and compared to perhaps a more public initiative and public funding, this could be more bottom-up process that is scaled through millions of households, distributed network of bank branches. And also banks get the benefit of, meeting the sustainability targets that a lot of banks now set for themselves. They will green their retail portfolio, including their mortgage portfolio. In fact, probably they would start from there. For consumers, of course, they would get access to cheap funding to renovate their home. Not to say, there are lots of research on the health and well-being benefits in living in an energy efficient home. Also increase deep renovations instead of lighter and insufficient ones using their own funding. For governments, streamlining and blending existing subsidies, and also targeted intervention in low-income households and those working in the worst performing buildings. For the ECB, it's a better transmission of monetary policy towards productive and sustainable bank lending. So also in the long run, there would be no systemic or even bank runs because of this transition-related stranded assets that are just kind of sitting on their balance sheet. It also ensures smoother transmission of monetary policy. And as I mentioned earlier, both ECB and the Commission get closer to Paris alignment and deliver on the Green Deal ambitions. So what is needed? is we need a green loan standard to scale up renovations and proper reporting and evaluation. There is a market incentive and a kind of market standard for so-called green loans that market participants themselves set, and there is a small but growing green loan market, whatever they classify as a green loan, and this seems to be the minimum targets in energy savings achieved as a result of improvement on the property. And the Commission asked the European Banking Authority for an opinion on the definition of retail loans and green loans and mortgages. It also concerns the supervisory standards and the supervisory reporting by banks on what green loans and mortgages are in the future. And of course, green loans should ensure highest consumer protection, that it is not greenwashing, but indeed it is targeted loans for improvement on the livelihood. And we worked with the European Consumer Association book on this as well. I don't need to repeat this, but for my presentation purposes, I think in the EPBD we think that the mortgage portfolio standards means that banks are further incentivized to reach out to clients. And now with the cheap loan available, there should not be kind of we don't see any challenges along the way. And also there are provisions that private financing needs to be scaled up, and member states should promote private financing, and there needs to be some kind of a public-private partnerships in terms of financing. For example, training energy efficiency personnel, or in the banking sector, or creating one-stop shops that involve banks and involve energy experts, perhaps even a subsidy for the initial energy assessment, that people are not paying for an investment that they're not going to carry forward. And the alignment between EPBD and the green loan standards of the EBA provides a certification framework and prevents greenwashing. So the policy consistency across ECB, EBA, and the Commission needs to be put in place to provide the kind of the private financial firepower for the renovation wave to succeed. So from our side, what we are doing at Positive Money Europe is that we are making sure and talking to stakeholders in different institutions so that we push forward on advocacy level and on campaigning level and on the research level that our proposal is taken on board. And 2022 is a unique opportunity to promote this proposal, given the many consultations that are going forward. On our side, the effort from us is on the research side, is to understand what really are the challenges and the bottlenecks in the banking sectors. Why at the moment, why there is so little, incentivizing customers to take out loans, and what they perceive as challenges. And this also touches upon the kind of previous point on the need for data. And there is a big kind of gap when it comes to data. And first of all, we don't have the data on the teltros from the ECB. Also, we don't have data from the private banking sector, at least on an aggregate level, to understand the scale of the energy efficiency loans that they give out, at what rate they give out, what's the average duration of these loans, and what can be done so that they are incentivized to give out this loan. So we're reaching out with a banking survey to banks around Europe And we would, given this opportunity provided by you, we would really like to urge the listeners, if you are coming from the banking sector, or if you're working in the sustainability departments of the banking sector, or if you're a loan officer, for example, to fill out our survey to understand the data challenges, and also at the same time, in a month or a bit more than that, we're going to launch a campaign on unlocking unlocking financing for the Renovation Wave in different member states, so that kind of they put pressure on their parliament, and in fact also on their national central banks, to carry out this proposal. So I would like to say thank you, and please take part in our research survey by emailing us. Of course, it's anonymity to research@positivemoney.eu. Thank you.
Thank you very much, Uuri. That's absolutely, please, I'll echo that. That please, if you are involved in that, or if you, a lot of people are from banking federations on the line, I think I've seen a couple already. Please perhaps circulate this to your members and help with that process. And Uuri, let us know what we can do when you do launch that campaign. Can I just, time for just one question maybe. The ECB has changed its mandate so that green considerations are part of it. I think the Bank of England has, some others have. But fundamentally, the two key factors of central banks are their primary job is price stability, and there should be independence of politics. Is there a risk, particularly as we go into an inflation, and we hear all these headlines about inflation, that central bankers are going to say, well, I'd like to do this, but my primary objective has to be price stability. So giving subsidized money via repo operations is no longer the priority. Is there a conflict?
Thank you for your question. It's a good question. Just to give a bit of a background on what the ECB is doing in terms of climate change. So last year in July, they came up with their strategy on kind of dealing with the impacts of climate change, and they came up with a roadmap that they're going to follow until 2025. Unfortunately, financing operations are not part of it, but this is a big signal that they are going to shift into problems that deal with tackling effects of climate change, and climate and environmental risks. And of course, you're right. Their primary mandate is price stability. In fact, what we are saying is that if you green monetary policy, and if you direct funds from polluting sectors to green sectors, there would be less energy shocks coming from these sectors, with ongoing kind of energy shocks that we're facing at the moment is very much related to the status quo, to the dependency of the economy on fossil fuel or traditional sources of fuel, and of course, there is going to be effect on inflation, and there is a lot of research at the moment going on what would be the effect of all kinds of policies, and in fact, just kind of ongoing effect on climate change. But there needs to be room from our side. We advocate for green investment and against premature tightening because of green investment, because it is needed, and in the long run, in fact, it is consistent with price stability. It is very much within the mandate of the European Central Bank to tackle the impact of climate change. And I think, President Lagarde said that tackling climate change is within the mandate of the ECB. And it is consistent, but in terms of the impact of sudden shocks compared to kind of medium term or longer term patterns, I think that's still being researched. But yes, very much the green transition is in line with price stability.
Good, thank you, and thank you for your presentation and indeed your proposal. And as I said, we will stand ready to help you where we can with that. So
Thank you very much. Thank you.
A few months ago, in one of the Bauhaus events, we heard from Ligia Bogdan from E.ON about the work that they're doing on consumer aspects, consumer behavioural aspects and perceptions of green mortgages. And at the time, I think we asked Ligia to come back and update us in a few months on the progress. So now is that time. So I think that there are new markets, there are new questions being asked of consumers. And well, Ligia, also Luca's question, but so far all that Luca's question has done is confirmed that he and I are both very old. So if you feel able to comment on where you were when the Maastricht Treaty was signed. If not, let's just ask if you could just share with us an update on your work, please. Ligia, are you on mute? You're on mute still.
Can you hear me now?
Now we can hear you, yes.
The little microphone sign disappeared because I'm not so used to WebEx. We always use Teams.
And all of these platforms are subtly different in a way that trips you up at the wrong moment, right?
Yeah, exactly. And when I shared my screen, then the other things disappeared.
But loud and clear now.
So thank you so much. I'm very excited to be here today. Thank you for the invitation. Regarding Luca's question, well, I was 5 years old, so I was probably playing with kids around, not wanting to learn to read or write, but just to play Remy with my grandparents. So that's where I probably was. Somewhere at a cottage in the mountains in Transylvania.
Everyone's just making me feel very old. I was already working in a bank then.
It's exciting. Good. So I think, thank you so much, Uuri, for the presentation. I think it's a really good segue to our research, more on the consumer insights, and we are definitely welcoming the proposals. At least a lot of over 4,000 consumers across Europe are definitely welcoming cheaper green financing, whether in form of a loan or a green mortgage with more sustainable discounts. This is something that we've heard both in the qualitative focus groups that we carried, as well as in the quantitative results. So what I wanted to do today is to bring a little bit more insights than last time when I gave you a sneak preview. So just briefly, I have this also for context. So our research contained a qualitative phase and a quantitative phase. And in this section, I will take you through the results of the quantitative phase more. So this is over 4,000 respondents across 8 European markets. What I want to cover today are 3 things. First of all, I want to take you through what role energy efficiency plays for consumers when applying to mortgages or when thinking of financing. How do they react with the proposition we develop together with banks? And also which product features would drive appeal and what are barriers that still need to be overcome in order to drive appeal even further. Good, so let's go into what role does energy efficiency play. Here we looked at 3 different aspects. So we asked consumers how well they know the energy efficiency of their home. We asked them what is important when you choose a mortgage provider. And we also asked them how interested would they be to make energy efficiency improvements to their home. So as you see here, interestingly enough, many respondents think their home is fairly energy efficient. I think especially my countrymen are overly optimistic of how energy efficient their house is. So in general, they think it's fairly energy efficient, but there's definitely room for improvement across the markets. Now, what's of course interesting, we wanted to know if they have heard of energy efficiency ratings, and as well how well they understand the energy efficiency ratings. So you can see here actually a fairly high score that most have heard of energy ratings, but in terms of understanding of EPC ratings, this definitely has room for improvement. And we see here fairly low for Sweden. This could be also the case that the EPC rating has been changed, and that's why consumers seem to understand it less. I think this was done in 2019 or 2020. Good. Now we also asked them what is really important, what factors are really important when they choose a mortgage, and mainly financial factors such as the mortgage interest rate, the monthly repayments, the total mortgage amount paid over the term, customer service, different fees and advice, while sustainability is towards the bottom here. But what I also want to point out is actually, I mean, this is the percentage of people that gave the most important from a scale of 1 to 7, they answered either 6 or 7. So even when it comes to sustainability, we see also in Italy, roughly 45% did say this is very important to me. So in some countries it's 20-25%, but still it's quite a high score, even though it's probably number 10 on their list. So we also asked them, how likely are you to consider making energy efficiency improvements to your home to make it more efficient? And here as well, many of the respondents are very likely to consider making energy efficiency improvements. So it's also interesting that for Romania, 70% said, yes, my home is very energy efficient, but hey, I want to make a lot of improvements still. So there is definitely a big potential market here. Now, we also asked, how likely are you to consider taking out a personal loan or / a consumer loan to make home improvements to your property? Again, here, this slightly differs per country, but it's still fairly likely. From 30% to 65% in Romania, people are likely to take a loan for energy efficiency improvements. And as well, we asked them, how likely are you to add additional borrowing to your mortgage? And you can see here, in some countries, people are more likely to add to their mortgage rather than taking a personal loan for home improvements. And also what we wanted to know is, what if they take out the lending, what would they like to use it for? Would they like to use it, all of it, for energy efficiency improvements, or they would like to use some of the money to make other improvements? And we see here that the majority, so roughly between 60 to 78% said, yes, I would like to use all of it to make energy efficiency improvements. But offering this flexibility when banks build their proposition to have the flexibility for also painting the walls or additional improvements around the house and the renovation, this would drive appeal even further of a green mortgage proposition. Good. So let's go briefly now into what was the consumer reaction to the green mortgage proposition. But first, I briefly want to recap for the ones who are new in this call on the proposition we tested. So we showed the consumers during the online survey the following products. So we described the green mortgage offer. We said that it's a new product that rewards customers whose home are or become energy efficient. And then we also made it clear that their mortgage interest rate would decrease by a certain discount that differs per country depending on the interest rate levels. We gave them also two options to make their home energy efficient. They can either borrow from the bank or they can use their own funds to make their home more energy efficient. And then once they have the final audit and their home reaches the right energy efficiency rating, they will get an interest discount on their mortgage. So we also felt important to highlight the benefits of a green mortgage. And these are financial savings. So in terms of the discounted rate, energy cost savings, so can save between 20 to 50% energy efficiency homes on their energy bills. And maybe here, to make the remark, we conducted the survey in summer of last year before the big spike in energy prices. And I think in Germany, at least, I was paying 30 cents for per kilowatt hour. And now you can get a new contract for 40, 50 cents. So it's been a considerable increase also across all the markets in energy cost, on electricity and as well gas. So I think this kind of proposition would be even more appealing were we to conduct the survey maybe now. It's also important to mention that energy efficient homes also increase the property value. They improve the CO2 footprint of a house, and it also lends to a more comfortable, cozy home. Now, we also wanted to make sure that we explain the process to the consumer, because any renovation takes time, it's very lengthy. And in this case also, it requires a home audit in the beginning and a final audit at the end. Good. So what did we look into assessing this kind of proposition? We looked at key metrics such as clarity, relevance, appeal, and preference of a green mortgage. We also wanted to test the pricing level, so the interest rate discounts to be offered and how a higher interest would increase the appeal. And also looking at, because it's a very complex proposition that includes also energy companies to deliver and install solar panels, insulation, a new heating system. Also, what is the impact of banks partnering with an energy supplier on appeal? So just briefly here, in clarity, across the board, I was actually very surprised because it's still a fairly complex product. In terms of clarity, it's fairly high across all the markets with over 70%. So it's very low likelihood for them to misunderstand the proposition, as very few were actually unclear about how it works. In terms of relevance as well, highly relevant across the board, slightly muted, and you will see this across all of the insights. It's slightly muted in Sweden and Netherlands, and this might also be because of already the high energy efficiency levels of the buildings. Also, what we looked into, how does it differ? How does relevance differ between the ones who are first-time buyers of a mortgage, the ones who already have a mortgage or have taken multiple mortgages? And across the board, first-time buyers who are entering the mortgage market seem to be much more likely. For them, it's a much more relevant product. And this can be also a very appealing market for banks to target this kind of propositions. Appeal, as expected, closely correlates with relevance, as you can see here. And then we also, let's say, gave a list to users of the different aspects of the green mortgages and asked them what are the most appealing attributes to you. So financial, tangible economic benefits, as no surprise, do rank the highest. So in terms of bringing down the cost of the energy bills, also giving me a warmer, more comfortable home, having flexibility in terms of payment. So this is also a good signal in terms of when advertising such a proposition, what to focus on in the communication. We've also tested preference. So in terms of which mortgage would you be most likely to choose, a green mortgage or an existing mortgage that you are currently considering? And here, roughly 25 to 43 of respondents said definitely green mortgage or probably green mortgages. Now, in the beginning, I found this is fairly low. Why is there such a big difference in appeal? But also our research agency, as well as other banks, have mentioned that this is just a typical drop-off across industries when you introduce a new product, that preference is lower than appeal, but still a very good preference score. Again, we looked at deep diving into how does it differ between first-time buyers and the ones who already have a mortgage, and it's higher scores again here for first-time buyers that would prefer the green mortgage proposition. And now to the pricing. So we tested different discount levels. So you can see here in green is the main stimulus discount that we tested. We showed them this one first. And then, so you can see a discount of 0.15 percentage points in Sweden, up to 0.50% in Romania. This is also due to the different interest rates, because we're looking at roughly 5 to 6% interest rates for a mortgage in Romania to a much lower 1.5 or so in Sweden. So we wanted to make the discounts comparable. And what is interesting to see here, when we then showed a lower discount or a higher discount, what is the change in appeal of the proposition? So we asked consumers, if this rate was changed to this discount rate, how appealing would you find the green mortgage proposition? And you can see if we take, in some countries, the gap main to higher discount is quite big. So for example, if we look at Sweden, the main stimulus discount appeal was 37%, but this can be pushed up to 55% if the discount is increased slightly. Whereas in other countries, for example, Hungary, the appeal increased marginally, or for example, in Italy, there is only slightly increase in appeal. Good. And here, in terms of partnering, we also wanted to know if this mortgage product would be provided by a lender of your choice, together with an energy supplier. Would it be more or less appealing to you? And here, the majority said this would be more appealing or much more appealing to me if this would be provided by a bank together with an energy company. Good. So now I want to briefly go into the product features that drive appeal and what barriers need to be overcome to further increase appeal in the future. So I will go first into the consumer benefits. So this is really for how we position, how the product can be positioned, and how the communication and the messaging can be optimized to appeal more to consumers. And then going more into additional product features that we didn't include in the first proposition, but we then ask at the end which ones would be relevant for you. So maybe here just a little bit of verbatims from from users. You can see here a mix of financial and environmental drivers are spontaneously mentioned. So they look at, it would be ultimately help me save money and do something good for the environment. So it seems beneficial both in the long run for both me and for the environment. So this is really the two factors that increase appeal. Now, in terms of the attributes or the benefits that drive appeal, you can see also here we have a list for each country. What are the top 5? If we go, let's say, for Italy, interestingly enough, here they say important is reducing my carbon footprint as number 1, gives me a warmer, more comfortable home, can be combined with super bonus, tax reduction programs, can pay loan back over a time period that suits me, brings down the cost of my energy bills. So it's very much in terms of bringing down the cost of energy bills and a lower interest rate. And the same across the other markets such as Netherlands, Romania, Hungary, and also Germany, with also the warmer, comfortable home ranking as the top 3. When we also asked what are the top 3 most appealing benefits, then you see also the Italians responded, bring down the cost of my energy bill as number 1. But interestingly enough, they still have reduces my carbon footprint, whereas this one didn't make it in all other markets. So it seems that in this survey, or at least the 500 respondents from Italy, seem to be very focused on the carbon footprint as well. Good. Now going to the features, the additional features that we wanted to test. So we also gave a list, let's say, for consumers to pick what would be more appealing to them, what would be further encouraging them to take the green mortgage. And you can see here, no mortgage application fee, and amount quoted for any additional work is guaranteed. So this is something that comes up that's quite important, because this provides a guarantee that their home will reach the right energy efficiency class at the end of the whole renovation period, and they will actually get the discount on their mortgage. Free home audit is also very popular. And then the same for other markets, ability to repay early. And now when we also ask them the 3 most appealing benefits, you can see here that many chose the ability to use the energy bill savings to finance all or part of my improvements. And this clearly also plays into the partnership between banks and energy companies to really bring out such a product also to the residential market, as to my knowledge is quite common in the B2B, in the bigger corporate world, the energy performance contracting. Good. So here is again the list. So we will share the presentation so you can look for each market, because we also had some particular things that we tested only in different markets, such as additional discounts from furniture stores or additional discounts or energy efficiency appliances, cash back when taking out the mortgage product, free home audit. So we wanted to see the difference in appeal. But overall, I think all of them ranked quite high, from 60% to 75%, very appealing. Good. We also introduced additional government benefits. So what can governments do to really help push the green mortgage market? And one particularly interesting one would be no VAT charge for all energy efficiency products you buy for your home. So reducing the VAT, depending, this would be, I think in Germany, from 19% for solar panels to 5% would make also a huge difference. Additional subsidies for energy efficiency products, so this kind of 50% rebates that were also available in Italy. It would be great to see these across also other European markets. Additional borrowing at a 0% borrowing rate. So definitely this would increase even more the appeal. And now looking at the barriers, as we can see, barriers to uptake are largely financial. So proposition clarity is less of an issue, but the main barriers are, I don't want to take out an additional loan, or I can't afford the additional loan, or I worry about having larger repayments. Hence, I think anything that can make the interest rates for a green mortgage or a green loan lower will definitely be a market maker in this case. So I also want to highlight with some verbatims here. Here you can see we don't want to, someone from Hungary, we don't want to pick up more credit. It also seems a bit more complicated. It seems quite costly, and I feel comfortable and safe with my current mortgage. So also the whole process and having a guarantee in the beginning would be great to be made very smooth. Good. So maybe just to wrap up, because I have taken you in the last probably 20 minutes or so through a lot of data and analysis and insights, but I just wanted to summarize the key takeaways. So, role of energy efficiency when applying for a mortgage. I think here is important that although sustainability is not a key factor, it is becoming more and more relevant and top of mind to consumers, and there is clear consideration that they want to make energy efficiency improvements, and they are open to also borrow. The proposition that we tested scored high on clarity, relevance, and appeal, as well as partner and having this proposition across the sectors will definitely lend more trust and provide a smooth customer journey. And thirdly, in terms of product features, here is very important to communicate financial benefits such as lower energy bills and flexible loan conditions and payment options, and to additionally offer a guarantee that the amount quoted for improvements in the beginning to bring a house to energy efficiency level of A or B is a key part in adopting the proposition, and as well as potentially a free home audit could be also very relevant in convincing the consumers to start this journey. Good, so this was me.
Thank you, Ligia, for all of that, and I've been sitting here fascinated by it. And Luca's going on about the anniversary of Maastricht, and I'm trying to understand all of these national differences and what are drivers, and then the policy implications of that. If something, a different thing motivates someone in Romania and Germany, then that's really interesting for how we can define policy. And I think,
yeah, and I think it's something that we have seen also in our qualitative research, especially the difference between Western and Eastern Europe, and introducing countries such as Hungary and Romania, where the trust in banking institutions is lower, and taking a mortgage when you don't know what's going to happen to your interest rate in 5, 6, 7 years from now, they would rather go towards a consumer loan and having and being able to pay it within 5 years. But this is also a very high interest rate of 10% or so. So energy efficiency improvements are different, whereas in markets such as Netherlands or Germany, they really welcome adding additional borrowing to their mortgage because they consider a mortgage very safe and they really trust in their banking institutions.
Maybe just to step in, I've seen a lot of questions from Monique, BNP Paribas. We fully agree that personal finance is an important element to factor in our game. I think that as Ligia represented, every single market is reacting to different things. As you just said, Ligia, everyone can decide the right mix between personal finance and mortgages, or I think the energy efficiency mortgage label wants to give answer to this. So every single country is able to play around to give a transparency to consumer. What are the options that they have, and they can maximize their benefit. So this is what we are trying to do with the energy efficiency mortgage label. I would like just to say that the report of Ligia will be very soon available. I think that we will publish this as a question of days. So we will try to send to all of you this via email. So you will receive, we will publish, maybe we will send an email to all the people in our green distribution list, but also will be available, Jenny, correct me, if in the Energy Efficiency Mortgage Initiative website, that we highly recommend all of you to go there and to visit. And of course, in the Bauhaus section, you will find the presentation of Ligia available for your use and the video of this event. Thank you very much, Ligia.
Yeah, thank you, Ligia. I'm sorry that we don't have more time for questions, but we do have to move on. But promise you will come back to a future edition of Bauhaus to update us again.
Thank you very much.
Thanks. So our final topic today is a very important one, and for everything that we're trying to do is perhaps a problem that needs to be addressed. And that's GDPR compliance. To what extent are we able to share the information that we need to do all of these things? Let's now hand over to Vasco Hoving from Amsterdam, from Rutgers&Posch, boutique law firm, who focuses on capital markets issues, to go through a presentation. He's analysed the GDPR implications of the Energy Efficient Mortgage Initiative. So, Vasco, I hand over to you. And sorry, and Luca's question of where you were 30 years ago first.
I'm sorry to disappoint you, Richard, Luca, but at that time I was 6 years old. I was in primary school. I'm very sorry.
another one making me feel old.
Yeah, so I don't recall exactly. I wish I was on a trading floor too, but unfortunately I wasn't that talented as this 6-year-old.
At least you were close to Maastricht, so which is fine. It's fine. You were in primary school, but close to Maastricht, which is good.
That's
okay.
True.
That's a good point.
Yeah. No, thank you. Yeah, my WebEx skills are also not as good as I would want, and so I've asked Lucine to take over control of the presentation, also because our law firm seems to have a firewall, so I'm not able to go through the slides. So Lucine will help me go through those. Yeah, I'm conscious of timing, so I will make sure that all the most important topics I will touch upon in the presentation. I've followed all the previous presentations with great interest. They were very interesting. And also the presentation of Thibault about the Energy Performance and Buildings Directive was very relevant also for our analysis. And I will try to chip in also and make that connection along the way in my presentation. So even though Europe is setting the global standard for the protection of privacy rights, I think you all have probably aware and have heard of the struggles that many corporations and also government organizations have had when complying with GDPR. It's rather a strict framework if you Google it also online, and I did so just now. Then what it says, the general data, I think it's an EU website, it says the General Data Protection Regulation is the toughest privacy and security law in the world. And I think that's correct. And so it's also relatively new, and that means that it's still progressing. It's a live form of legislation, it's evolving. And so it has been a struggle for corporations, also government organizations, to keep up. The Energy Efficient Mortgages Initiative received a message from banks and regulators that the processing of energy performance data of houses by mortgage loan providers could breach privacy rights of mortgage loan borrowers. And so this introduces a problem because mortgage loan providers are a key player for a greener European economy and the green transition as a whole. Our firm was engaged by the Energy Efficient Mortgages Initiative to investigate potential data protection issues that can arise in connection with energy efficient mortgages. And our team consisted of a team of lawyers specialized in sustainable finance, data protection, structured finance, and also litigation. And through this presentation, I will explain what data protection issues can arise when mortgage loan providers collect, process, and store energy performance data of borrowers' houses. I will also explain what can be done to ensure that mortgage loan providers can continue to promote the transition to a greener European economy. So the agenda of today, you can see it in front of you. With a view to timing, I think we can skip this slide of the presentation and quickly dive into the nitty-gritty of GDPR. Thank you, Lucine. So the first important question will be, is energy performance data actually personal data? So if the answer will be no, then there wouldn't be any issue. And then we could move on, and mortgage loan providers can collect, process, and store that energy performance data. So there has been some confusion about what personal data actually is, because that definition has also evolved over time. And in practice, actually, the hurdle for the qualification of data as being personal data is quite easily met. So GDPR defines personal data as any information relating to an identified and, very importantly, also identifiable natural person, which is the data subject. And that natural person can be identified either directly and, importantly, also indirectly by reference to an identifier such as a name, an address, a code, or anything from which that identification can be made. And that identification should be able to be made without disproportionate effort. So if we look at energy performance data, we understand that for mortgage loan providers, there will be a database, and in that database will be the energy performance data of individual houses, the green data. And that database would contain also addresses. And so if a mortgage loan provider would combine that database with another database that it has, and that database has the borrower information and the loan information, quite easily you can link somebody's carbon footprint from their home to that specific person. And so that data qualifies as personal data because there's no disproportionate effort required for the mortgage loan provider to make that link. And so the GDPR framework does apply, which was the first question. And then we move on, well, what does that even mean? What does it mean if we actually do qualify energy performance data as personal data? Lucine, please can you go to the next slide? So it doesn't necessarily have to be a problem if we qualify energy performance data as personal data, to the extent that the collection, storage, and processing of that personal data, that energy performance data, by mortgage loan providers can be done in a lawful way. And GDPR requires a legal basis for the lawful processing of that data. One legal basis could be consent of the borrower. So consent can be a condition when granting a new mortgage loan. For instance, but it would only work if you would have a mortgage loan which is green, but you can also offer a non-green mortgage loan, because otherwise the borrower would be forced and would not provide out of free will its consent. The issue with this legal basis is that it wouldn't provide a solution for all existing housing, because those loans have already been granted, and it is common practice in structured finance that borrowers don't really respond to requests for consent, for instance, for collecting, processing, and storing their energy performance data. And so the bulk of all loans are the existing mortgage loans, and at least in the Netherlands, the lifespan of mortgages is 11 years. And so in the short and medium term, this would not provide a solution. Also, borrowers cannot at any time withdraw their consent. And so this makes it a rather shaky legal basis. The second legal basis for lawful processing under GDPR of that personal data, the energy performance data, is that it would be necessary to perform the contract. This would only work, of course, for green mortgages, because those do require that energy performance data is processed in order to establish that it can qualify as a green mortgage, and also doesn't provide a solution for any existing mortgage loans. Then the third legal basis will be that the processing, collection, and storage of that personal data, the energy performance data by that mortgage loan provider, will be necessary to comply with a legal obligation. For this purpose, we have analyzed European regulations, but most of these do not constitute the required clear, precise, and foreseeable obligations which permit the collection and the processing of that personal data. For instance, the European Green Bond Framework, which is currently still in draft form, is expected to be on a voluntary basis and therefore doesn't create an obligation. The EU taxonomy regulation, in combination with the Climate Delegated Act, does contain the green asset ratio, which determines in what manner, to what degree the assets of a bank are green as opposed, or taxonomy aligned, as opposed to the rest of those assets. That can qualify as a clear, precise, and foreseeable obligation. However, it doesn't apply to non-bank or non-insurer or other financial institutions which don't qualify as banks, and so doesn't provide a solution there. And furthermore, it doesn't apply to new buildings. And for instance, in the Netherlands, for the construction for new buildings, borrowers also obtain a loan, but that is also for the construction of new buildings. We understand that for the rest of Europe, those loans are usually kept on the book of the bank, but at least for the Netherlands, that wouldn't work for the green asset ratio, because it doesn't include loans to borrowers for building new buildings. So the last alternative is that the processing of that personal data would be required for the legitimate interest of the mortgage loan provider. And this legal basis seems to offer a better solution than the previous alternatives, in view of the Green Action Plan of the EU and other various government initiatives, and also, you can understand that there's a legitimate interest, perhaps, of mortgage loan providers to comply with laws and regulations, and there can also be a market demand for green mortgage loans, and there could also be investor demand for green assets, and so these could potentially qualify as legitimate interest. This legal basis does require a balancing of the interest of the mortgage loan provider, the legitimate interest of the mortgage loan provider, and the interest of the individual mortgage borrower. And so the processing of personal data should be as minimally invasive for the data subject, mortgage loan borrower, as possible. The downside of this legitimate interest legal basis is that borrowers have the right to object to the inclusion of their energy performance data in the database. And in practice, usually this right is rarely used by data subjects. However, we are already informed that there is a European homeowner organization that may protest to the inclusion of that energy performance data in the database, because they are afraid that, for instance, the energy performance data can affect the value of housing. And so this is in essence quite understandable, because energy inefficient homes may become less fundable, less attractive, and in that way it can affect housing prices, and that could actually spark protest and objection rights of data subjects to the inclusion of their energy performance data in that database. Therefore, all of these legal bases, they have their advantages, but also their own shortcomings. Rosine, please, can you go to the next slide? So the other important topic I would like to discuss with you is that mortgage loan providers also need access to third-party sources which store energy performance data. The analysis which I just explained, it also applies to data which is obtained by mortgage loan providers from the land registry, for instance, but also the government organization that stores energy performance data in order to establish the energy performance certificate. And this is where the connection to the Energy Performance of Buildings Directive comes in, because that is the legal basis on which those energy performance certificates are established. And we understand from market parties that these sources, at least in the Netherlands, are very important for mortgage loan providers in order to assess the energy efficiency of buildings. The energy performance certificate itself is not enough. More data is required in order to assess the energy efficiency of buildings. So there's also another important limitation here, and that is that green data collected from the third-party sources must be consistent with the purpose for which the data was originally collected. This means that the government organization had a purpose of collecting that data, for instance, to grant an energy performance certificate, but a mortgage loan provider may have a different purpose, for instance, underwriting a new loan or reporting on its green assets. And so this could limit the access to that third-party personal data, which could make it more difficult for a mortgage loan provider to obtain this, because any collection storage of that data would not be lawful under GDPR. And so where does this leave this? What is then the way forward? Musin, please can you go to the next slide? First, it should be noted that the GDPR analysis may vary across countries in Europe due to the fact that local regulators may have different policies of enforcement of GDPR. And for instance, local courts may also have local interpretations of certain aspects of GDPR, where the European Data Protection Board has not provided guidance on this topic yet. Lastly, there may also be local privacy regulations applicable in various countries, which could be relevant. And secondly, which is also important, is that it depends on each financial institution, each type of financial institution, this analysis, for instance, whether a green asset ratio applies or not. And so this analysis should be done on a case-by-case basis. Now, each legal basis has its own advantages, but also its shortcomings. In relation to the purpose limitation in respect of personal data, which is obtained from third-party sources. As a result, we would advise that it should be considered whether to include a statutory basis for the processing, collection, and the storage of energy performance data by mortgage loan providers, which would enable the lawful processing and which would remedy hiccups of having to assess this in each individual European country, and, for instance, creating a delay in the rollout in respect of especially the existing housing stock, where the privacy analysis is probably going to be more difficult, as opposed to, for instance, the new building stock, where a condition can be included in that mortgage loan that the energy performance data should be collected, processed, and stored by that individual mortgage borrower. We are in contact with the Dutch Ministry of Domestic Affairs, and in the Netherlands also the Dutch government agency which processes energy performance data for the energy performance certificates, and are hopeful that we can look with them to structure this in a way that mortgage loan providers can obtain access in a way that they can still promote the transition to a greener economy. Should you have any questions on these privacy considerations, please let us know. We have invested a lot of time in this, and we are happy to share our analysis with you. I understand it's now 4 o'clock, so I've been rushed a bit through my presentation, but I hope it was still clear. And I'm happy to take any questions offline if needed.
It was very clear, and you're absolutely right. Thank you, Vasco. You're absolutely right, though, that we are running out of time. If I could just have 1 minute, though, I just wanted to understand the amount that it varies by country. So GDPR is an EU piece of legislation. But you mentioned there that there are national differences in interpretation and regulation. In the spirit of Maastricht, as its 30th anniversary, should there be national differences? Why can we not apply a same interpretation of the same legislation?
Yeah, that's a very good point, Richard. This is why there is the European Data Protection Board on an EU level, which is a key authority which interprets certain aspects of GDPR, which is still unclear, and it publishes guidance in this respect. And that guidance is used at every EU member state to harmonize the application of GDPR throughout Europe. And so there is already a solution to this issue, but and that is great. But there are certain areas on GDPR where there is no guidance yet from the European Data Protection Board. And so there is a possibility that a local court may interpret GDPR slightly differently in that area. But you are, of course, correct. The GDPR is a European regulation, which means it's directly applicable everywhere. And so it should be applied in the same way.
Okay, thanks for that. That is a topic, well, I'm sorry, like all the presentations today, we could have kept going on for a lot longer. There are questions that I'm afraid we're not going to have time to cover. But thank you so much for your work and for doing that. And thank you to all of the presentations today. We've had 4 very different and very thought-provoking presentations. Apologies for slightly overrunning. I think that we are going to be discussing a lot of those topics in future editions of the Bauhaus. Next one on the 14th of March, please put that in your books. And let me hand back to Luca, if you have any concluding remarks, other than I'm the oldest person here. You're the second oldest. Everyone else was a toddler when we were signed it, when the treaty was signed.
Well, this is the story of the next generation. We are designing the market of tomorrow. So, I mean, we need a young participation in this panel just to secure the future, to bridge us to the future. No, just a thank you to everyone. I think it was a spicy discussion. I promised this at the beginning. And we will continue. I mean, I will try to make sure that Thibault will follow us in the next event on the 14th. So we will continue the discussion. A lot of things are happening. Please don't hesitate to share with us ideas, and then we can put this in the platform and we can discuss about those things together. Hopefully, very soon we will be able to meet again in person. Be assured that we will try to make a nice event as soon as this will be safe and possible, and we will find a very nice location to have you all together. So thank you all. Thank you, Richard, for guiding us in this very interesting trip around Europe. And I hope to see you soon and have a lovely afternoon. Thank you all, and thank you to the speakers for the fantastic presentation. Thanks. Have a nice afternoon.
Bye-bye.